Yes, good evening all. Can you please confirm if my screen is visible and my audio or voice is clear?
Hello, good evening. Hi everyone. Everything is clear on my side.
Right, so I left this question behind. I presume that we all tried out. So once I'm showing you how to approach ethics questions, I'm sure you'll also be following and you'll know where I'll be picking the information from. If I can just confirm, did anyone try reading through this question? Did anyone try going through this question? No one tried out?
I tried out.
Okay, let us.
I also tried.
All right. Okay, so we said we first read the question and see what we are required to put down. They're telling us that we should discuss the accounting treatment which Ramuco should adopt to address each of the issues above for the consolidated financial statements. So this is the nature of question 2. You will have accounting treatments that you must dissect as a technical person and give guidance on how each of them should be treated. You'll find that each scenario or each case has its own marks, meaning that for factory substance 5 marks, and for sale of Jonico 6 marks. So here there are no marks, but they can be identified with the independent scenarios. So that is the accounting treatment. While we are reading, we shall be brainstorming on what would have been done and where we think the errors are. We shall see which standards are set in there. Part B is our point of interest. Discuss the ethical issues arising from the scenario, including any actions which Ramuco and the accountant should undertake. So they want us to discuss any ethical issues, anything that is not within the norm, and also suggest some actions that should be taken. 7 marks. We said your ethics question should always be between 5 to 10 marks in question 2. So this is barely the format of your question 2, and so with practice you'll gain the confidence in approaching question 2 and how you can earn the free marks. So let us read through, but I'll only draft part B, a full answer, so that you can see how you can present your ethics questions. For part A, while we are reading to identify points for part B, we shall be also discussing which standards are applicable. Okay, let us proceed. I presume that I think we have most of us finished the syllabus, so there is no standard that is new. In case there is any standard that is new to you at this point in time, it means that you have a lot to do in the remaining few days. If it means not sleeping, please you should, because it is better you watch all those videos so that you enter the exam when confident with all the necessary information. I want to remind you that these revision sessions are just for technical guidance and how to approach the questions. So we might not so much go deep into the standards because the lecture videos provided the same. Okay, Ramco manufactures white goods such as washing machines, tumble dryers, and dry and dishwashers. The industry is highly competitive with a large number of products on the market. Brand loyalty is consequently an important feature in the industry. Ramco operates a profit-related bonus scheme for its managers. It operates a profit-related bonus scheme for its managers based upon the consolidated financial statements. But recent results have been poor and bonus targets rarely been achieved. So you're going to find that someone is going to be interested in the performance of the company. Why? Because there are some bonuses that are tied on the performance of the company. As a consequence, the company is looking to restructure and sell its 80% owned subsidiary Johnco, which has been making substantial losses. The current year is 30th June 2008. So these guys are looking at restructuring and selling something that is making up losses. Of course, you'll find that some bells are ringing in terms of an operation discontinued. Okay. Factory substance. Ramco has a production facility. I told you while I was reading this, I picked out this information. The first one was profit-rated bonus. It is likely to trigger someone to behave in a given way. And then poor performance and targets not achieved. Those are very important. Okay, Ramco has a production facility which started to show signs of subsidence since January 2008. There is a production facility that showed signs of subsidence. We said this is more like an internal indicator of impairment. It is probable that Ramco will have to undertake a major repair sometime during 2009 to correct the problem. You see, those who have looked at IAS 37, it is probable that they will need to make a major repair sometime during 2X9 to correct the problem. Ramco does not have insurance policy, but it is unlikely to cover. Ramco does have an insurance policy, but it is unlikely to cover subsidence. Yes, even if they have an insurance policy, the policy will not cover the subsidence of the factory. The chief operating officer refuses. The chief operating officer refuses to disclose the issue at 30th June 2008 since no repair costs have been yet undertaken, although she is aware that this is contrary to the international accounting standards. So this person Which standard are we talking about here? Which standard are we talking about here? Anyone?
Provisions.
Provisions. Okay, perfect. Meanwhile, while we are talking about provisions, which other standard can be seen under this factorial subsidence? We have provisions I-37. Which other one? So far we've read about
36 requirement.
Yes, IS-36. So far we've read two standards, IS-36 and IS-37. Meaning that in our discussion, we should discuss, okay, the two standards. But the question is, should we make a provision for that repair? Do we need to?
No. Yes.
What are the conditions of making a provision?
It should be highly probable that there will be an outflow of resources, which I see here. They're saying it is probable that REN will undertake a major repair.
But now, is there an obligation? Because we only make a provision if there is an obligation. Is there an obligation for futuristic expenditures? Yes, please. So there is no obligation. You should always look for constructive or legal obligation before you say that we should have a provision made. Meaning that it can only be disclosed but not provided for. Alright. And then when it comes to IS-36, okay, when it comes to IS-36, of course you discuss what impairment is. You talk about the indicators, okay. You talk about how do we assess for impairment. That is looking at the carrying amount and the recoverable amount. If you have enough time and you can articulate very well, you discuss about how the carrying amount is obtained, but most importantly, how the recoverable amount is obtained, discussing the fair value less cost to sell and the value in use. Those are all hints. So you first discuss IS-36, then come and discuss IS-37. Okay. Let us proceed. We have more information. The COO does not think, meanwhile, okay, the COO does not think that the substance is an indicator of impairment. She urges that no provision for the repair to the factory should be made because there is no legal or constructive obligation to the repair. This is perfectly okay. However, a disclosure can be made. However, a disclosure should be made. Okay, let us proceed. RAMCO has a revaluation policy for property, plant and equipment, and there is a balance on the revaluation surplus of 10 million in the financial statements for the year ended 30th June 2008. None of this balance relates to production facility. Please take note. What does IS... Now, which standard is this? Before I even tell you. Which standard is that?
IAS 16.
IAS 16. Perfect. RAMCO has a revaluation policy for property, plant and equipment, and there is a balance on revaluation surplus. Okay? Revaluation surplus in the financial statements for the year ended 30th June 2008. None of this is important, none of this balance relates to production facility. The standard says we can only utilize the revaluation surplus for any impairment if that surplus belongs to the same asset. Are you getting it? So this guy is saying, but the chief operating officer is of opinion that this surplus can be used for any future loss arising from the substance of the facility. So, in the accounting discussion, we talk about this. But which ethical issue do you think is around here? Which ethical issue is around here? Anyone? Lack of
professional competence.
Yes. We are seeing something like professional competence. That is, if the COO is not acting the way he's acting because of self-interest. You get? Maybe he's trying to say that we utilize this loss so that we do not take it to profit or loss to reduce the performance of the what? To reduce the performance of the company. Because since it does not belong to the production facility, it should be taken to profit or loss. Now this decision here, he doesn't want to reduce the profits so that he can earn the bonus. So now those are 2 points that should be discussed as far as ethics is concerned. Let us go to, so under scenario 1, we've looked at IS 36, IS 37, IS 16. And by the way, whichever standard you see first, you discuss that one. Because in this paper, we look for fast freely falling fruits. The standard that you see that is going to be very easy for you to write about, you start from that one. They don't say that you should follow them the way they are in the scenario. Not really. Okay. So number 2, in case scenario 1, we've seen there's some professional competence and then self-interest. Sale of Jonico. At 30th June 2008, Ramco had a plan to sell its 80% subsidiary Jonico. This plan has been approved by the board and reported in the media. Which standard is this?
IFRS 5.
That is IFRS 5.
5.
Let me hope we've all seen that. Approved by the board and reported in the media. The fact that it is reported in the media, it has created expectations amongst the employees that you know what? You are soon losing your jobs. It is expected that Old Jonico, an entity which currently owns the other 20% of Jonico, will acquire the 80% equity interest. What does this statement mean to you from the side of accounting treatment? What does it mean? Yes? They have already what? Established a buyer, not so? Old Jonico. The sale is expected to be completed by December 2008. Why are they giving you this statement? Who can tell us?
The 12-month limit.
Which one?
The 12-month limit.
The 12-month limit. Perfect. This is 30th June, December 2008, within the 12 months. Jonico is expected to have substantial trading losses in the period to sell. Okay? this one here, these guys are likely to have substantial trading losses in the period to sell. The accountant of Ramco wishes to show Johnco as held for sale in the consolidated financial statements and to create a restructuring provision to include the expected costs of disposal and future trading losses. This is testing your knowledge for which standards? This one here. Which standards are in there?
37.
37. Of course, it should be recognized as held for sale. But the question is, should they create a provision to include expected cost of disposal and future trading losses? Is that okay?
No.
No.
What is wrong?
There is no obligation to meet the future losses.
Perfect. Perfect. So, the issue is, okay, the issue is a provision. Remember, I talked about this. Reported in media. Okay? Reported in media. What does it mean? It has created an expectation amongst the employees that, you know what, we are going to disband and sell the business. Therefore, they can expect some compensation as employees. The standard says at that point, since there is that constructive obligation that has been created, then a restructuring provision should be made. However, what should not be included? Okay? What should not be included? 1, they only have to include those costs that are going to be involved in restructuring process. However, okay, the standard says this is true. Where is it? The sales expected John expected the accountant, that is perfect, to create a restructuring provision. This is okay. They can create a restructuring provision, and this can include any directly attributable costs that can be involved in the restructuring process. This can be either 1, legal costs or redundancy costs. Okay, e.g., any legal costs and redundancy costs. Of course, redundancy costs can be any amount that we are likely to pay to the employees as compensation. However, the standard does not allow the entity to make a provision for future costs and trading losses. I don't know if you're getting the point. Are you getting me? So these trading costs, the future trading losses, should not be provided as per IS 37. Okay, so this is the idea of the accountant. What is the COO saying? The COO is concerned as to how this may affect the sales price and would almost certainly mean bonus targets would not be met. Meaning the COO is against the issue of making or creating a restructuring provision. Yet they have already created what? they have already created a constructive obligation. Why? Because they have approved the plan and it has been reported in the media. So the COO is not right to say that the COO is concerned as to how this may affect the sales price and would almost certainly mean bonus targets would not be met. The COO has argued that they have a duty to secure a high sales price to maximize the return of the shareholders of Ramco. Okay? She has implied that the accountant may lose his job if he were to put such a provision in the financial statements. So under ethics, what is that?
Intimidation.
That is intimidation. Please take note. When it comes to these questions, they are very tricky. What are we going to discuss under ethics? It is the accountant and the company. For you, if you discuss issues about the COO, you are going to be losing out. Are we getting it? The COO is only showing one. We said that where is it professional competence? None of the balance is of the opinion that this surplus can be used for any future. You see this one here, it can appear in your accounting issues, but under ethics, it doesn't have to appear because you're not discussing about the COO, you are discussing about the professional competence of the accountant. Where is it? The accountant here. So this suggestion of the accountant, including the cost of disposal and the future trading losses, exposes the accountant to professional competence. Are you getting my argument? Guys, are you getting my argument?
Yes. Yes.
So you should be very careful on which parties you discuss under ethics. Not all points shall be falling under your answers. Okay. The expected costs from the sale are as follows. That is once they sell. Remember, this question is mixed up with accounting treatment and ethics. So you have to pick up which information goes to accounting treatment, which content goes to ethics. So future trading losses, 30 million. Various legal costs of sale. Of course, now when you're discussing the provision here, you can include that amount as a provision. When you're discussing redundancy costs, you can include it under your accounting treatment, but you can't include future trading losses. Then impairment on owned assets. Impairment on owned assets. The question is, should we include, okay, a provision for the impairment of these assets? Should we? Of course, no. Why? We are going to remeasure this business to what? To fair value less cost to sell as per IFRS 5. Are we getting it? And if you can remember very well your concepts of IAS 36, we don't allocate impairment losses to assets that are carried at their recoverable amount. So, since IFRS 5 tells you that at the point when you make a decision to move the asset to held for sale, okay, and then you carry it at the recoverable amount, that means that we do not have to make a provision for the impairment losses. Why? Because the asset or this subsidiary is going to be carried at recoverable amount. Included within the future trading losses is an early termination penalty of 6 million for a leased asset which is deemed surplus to requirements. Okay? So now this is which standard? Which standard is this? Who can tell us? Guys, which standard is that?
IFRS 16.
IFRS 16. And IFRS 16 says, IFRS 16 says, once there is any penalty, please go ahead and find the present value of that penalty and include it in the leased liability. Are you getting me? That is a special treatment that you guys now can know, that in case of any termination penalty of a lease asset, then you should go ahead, find the present value of that penalty if it is highly probable that the penalty shall be paid. So you find the present value of that penalty and then include it in the part of the lease liability. Alright, so this is IFRS 16. As I said, I'm discussing the ethics question because when it comes to accounting treatments, we've at least discussed the approach and we are all safe. So solution to ethics, which is part B. Before we left, I had discussed with you the approach to ethics questions. I think someone had asked, but I can still repeat the same, so that while I am applying the technique, you can be able to follow. I told you that, okay, approach for any question regarding ethics. 1, you explain the relevant accounting rule which has been breached. We've seen there are very many that have been breached, but of course we are going to discuss those that are in line with the accountant. Okay, then 2, we also, now this is a free mark. This is a free mark. You can say that you mention that the accountant is, or if they have used directors, or if they asked for the COO, ethics of COO. COO's actions are against or are not in line with the SCCA Code of Ethics. If you can remember, you can say the IESBA Code of Ethics. So this is a free mark. Of course, once someone is facing any breach of the principles of objectivity and is experiencing any threats, then that means that their actions are not in line with the code of ethics. Why? Because the code requires us to always prepare and present relevant and faithful financial statements. So this is a free mark that you can always put in your answer. Then number 3, what do we discuss? we explain and apply. Explain and apply any principles which have been breached. We started with accounting rules or any accounting standard breached. You mention that framework, then you explain and apply any principles which have been breached. Any principles which have been, of course, include the principle of objectivity, the principle of integrity, the principle of professional competence, professional behavior. I know you can all remember those 5 principles, but you don't discuss all of them. You only discuss what has appeared in the question. So after that, you explain any threats. Okay, let me show not explaining. Discuss any threats to objectivity. Within the scenario. Okay, within the scenario. That's how you can earn the 2 marks per point when it comes to the ethics question. I told you with SBR, it's not about how many points you make, it's about how professionally you present your case. So after discussing the threats, of course we've already identified here professional competence of the accountant. The threats, self what? Interest is already there. Okay, let us proceed. Number 5, we shouldn't always forget explain any available but relevant actions that should be taken by the party under discussion. If it is the finance director, you provide actions that can be taken. And I told you that under these actions, there are always 2. We have external and internal. But in your discussion, first provide internal actions. And I told you that under internal actions, you first discuss with the person. Don't backbite. Go and discuss with them. Tell them the impact of their actions once implemented. And then advise them to take the correct path as per the accounting standard. I don't know if you're getting it. So you discuss with the concerned party and tell them the impact of their suggestions and ask them to follow the requirements of the standard. We are going to have this practically, so don't worry. We are going to answer that question. Then 2, in fact, even after discussing with that person, you can also talk to those charged with governance. Talk to those charged with governance, like management. You can talk to non-executive directors. You can talk to the company auditors. Those are all internal mechanisms. Now the question is, what if those charged in governance are the ones who are implicated? Then you first discuss with them. Once they refuse, then you can go to non-executive directors. Maybe someone doesn't know this. Non-executive directors. NEDs. And then to the company auditors. Then secondly, you can provide what we call external actions. And under external actions, we can...
A question?
Yes, please.
The company auditors, do you mean internal audit or even external auditors?
Both. Both can be discussed with, because we are taken to be
Okay.
independent.
Okay.
Yes. Then external
Would that
actions.
be,
Yes, please.
would that be external for the external auditors? Would that be part of maybe external parties? External actions, external auditors?
External auditors. But these ones are, they are part of the company, we can say. Even if they are independent, all right? Yeah, because under external, we consider legal advisor, then SCCA.
Okay.
But depending on your interpretation, even if, in fact, you don't have to mention these are internal or these are external. You just provide them. You get it? No need of bifurcating the actions. So you just write.
Yeah, okay.
And external actions, you seek legal advice. You advise the accountant to seek legal advice, or advice from their professional body, And if they are SCCAs, you tell them to seek advice from SCCA. Then number 3 of the options that you can provide under this question, you can have what we call the last resort action. And this is resignation. Please provide this as the last option. As I've called it, it is the last resort action. So you can say, if the accountant feels that the challenges cannot be solved, they can resign from their position other than being part of the team that provides financial statements that are not free from errors. You can use your words. You don't just have to say the accountant should resign. No, you construct a statement that gives sense, as we are going to see in my discussion when it comes to the final answer. Any question regarding the approach? And if you can present your work in these 5 points with 3 points under action, trust me, you'll get the marks in full. Any question, or I proceed?
Question?
Yes, please.
If in the case the person who is doing the non-ethical stuff is maybe not yet a qualified accountant or is a junior person, from the external perspective of advice, would the point of professional body work if they don't belong anywhere? They're not qualified, they're very junior.
That's why we called it application. You only pick what is important. In fact, that is why even they call it. You see, if someone says seek advice from their professional body, if they say in the question that these are students of SCCA, that point works. You get? But if they say that this person is not anywhere, what you do, we always do this. You say, it is not clear if the person belongs to any professional body. If they do, they should seek advice. Are you getting that technique?
Yes.
It is not clear. That is if the scenario is silent. You get your mark because you're applying.
Noted.
Okay. Any other query? Yes, please.
If the principal that has been breached has been, like, in case it's the director or the CEO who has breached the principal, do you also mention it?
You mentioned what?
Like the principal that has been breached.
I told you, that's what I meant here. We should only discuss points in regards to these two. So you have to be very technical in identifying which principles and which threats are befitting these two. Anything that goes to the COO is likely to be out of the discussion. In fact, it should be out of the discussion. However, listen, however, the actions of the COO are affecting Ramco. Is that true? Are we getting it? The actions of the COO are affecting Ramco. Why? Because he's manipulating the financials. So we can also discuss them because they fall under the company that he works for. But in situations where the question was just like this, the accountant. Are you getting me? Now we only have to pick for the accountant. But in this scenario, they are asking for things that even affect the company as a whole. So any manipulations that are done by the COO are affecting the financial presentation of the company. So we can also discuss them. Are we getting the trick? You only get this trick if you keep practicing, get many case scenarios, go through them. You can debrief. I gave you access to the examination kit. Try out many ethics questions and then go through the answers to see how the examiner tries to draft them. And then for you process and see how you can write a befitting answer. And you shouldn't write what is a resemblance of the examination kit. Write what you feel can earn you the marks, following the technique that I've shared here. Is that clear? We proceed and answer the question, please.
Yes.
Okay. So we are going to follow one by one. We said explain the relevant accounting rule which has been breached. Remember, this is not part A where we're discussing to detail the accounting treatment. This is in line with ethics. So we discuss the accounting standard that has been breached. I'm going to do that for your practice. So I'm going to say accounting issues. In fact, what I am presenting, I will tell you what you can write or what you can put in your answer. This heading is very okay. You can write accounting issues. Then you start the discussion. Okay? So I can say the COO, we can use the abbreviation because it is given in the question. The CEO is not willing to account for an impairment loss. Yes, please, for the subsidence.
But I thought you said you consider the company and the accountant.
Of course, is the company in charge of any issue here? Look at this. Once the okay, where is that question? Here. She has implied that the accountant may lose his job if he were to put a provision. I want the one for subsidence. Anyway, in brief, I told you, since in this question, they want us to discuss ethical issues for the company. Okay, we realize that the actions of the COO impacts the financial statements of the company. The company on its own has nothing to do with ethics, but the actions of the COO impacts the fair presentation of the financial statements of the company. Therefore, the actions of the COO should be discussed because they make the company have unfair financial statements. And if you're getting the argument,
Yes, now get it.
you get it. It is a technique that you're going to really develop once you keep practicing. Otherwise, I cannot say that I can teach it to you now and you have it. But I've been emphasizing it. Pay attention to the discussions within the scenario. When it comes to this question, the RAMCO is the company and the actions of the COO impacts the financials of the company. Therefore, his actions or her actions should be discussed here. Okay. So this part I'm discussing, you see here they've told us that, where is it? There are many points that they discussed about, the impairment loss. Okay. Here, the Chief Operating Officer refuses to disclose the issue. This point. The Chief Operating Officer refuses to disclose the issue at 31st December, 30th June 2008, since no repair costs have been yet undertaken, although she's aware that this is contrary to. Remember, once, when you're discussing this IS 36, you talk about indicators, and then once there are indicators, you test for impairment. If there's impairment loss, you recognize it. We find that this guy is trying to refuse, okay, to recognize impairment loss, yet there are already indicators or signs of impairment. I don't know if you're getting it. But now this is true because there is no obligation. We discussed that. Okay, let me just discuss the ethics part. The COO is not willing to account for an impairment loss for subsidence, yet it is contrary to the. In fact, I'm picking this from here. Where is it? I'm picking it from here. Remember, you already discussed the details of the accounting standards. So under ethics, we don't go to the details so much. I'm picking it from here. They have even told you. And now for you can even say, yet it is contrary to, you can even just say IS what? 36. Otherwise, if you don't remember the standard, then you can copy paste what the examiner has used. Yet is contrary to IS 36 or contrary to international accounting standards. Okay. Then what else has the accountant not done? They have talked about which other accounting issues in here. The first one is for impairment. The second one was for IFRS what? IFRS 5. Okay, where is it? Even here you can say, where is it? Here. The COO here. We can also talk about this, because at the end we are going to look at why is he trying not to do these things. Because since that is correct, we cannot discuss it as part of the accounting issue. Please take note. Since that statement is correct from the COO, we cannot discuss it under accounting issues. Now we are going to pick this issue. with this issue here, then we rephrase it. Okay, let me pick it in fact from here. Let me pick it from here. Then we rephrase it to show that it is an accounting issue. So we can say, what's the name of the company? Ramco. Ramco holds a revaluation surplus of this in its financial statements for the year ended this. However, none of this balance relates to production facility. But the COO is of the opinion that this surplus can be used for any future losses arising from the substance of the production facility. This is contrary to the requirements of IAS 16. And then that is your discussion. You've just played around with the concept in the standard, and then you come up with your answer. Someone's going to tell me that these are very many lines. It is true. You can try to reduce them, but no one is going to penalize you. Yes, someone has a question?
So you only put this is contrary to the standards. You do not state what the standards require.
Since the question is already here, you already discussed it here, not so? I mean, where? Here. You already discussed it here. But someone who is so confident can repeat here and say this is contrary to IFRS 16, which prohibits offsetting revaluation losses against surpluses of different assets. Or you can say, however, IAS 16 requires that revaluation losses are offset for revaluation surpluses in OCI for the same asset. Once you understood the concept, the phrasing of the answer is upon you. Is that okay?
For me, it is okay.
All right. Let us look for another accounting issue. The first one we finished. This one, not accounting issue. This is accounting issue. Then we come to sale of Jonico. Which accounting issue is there? You read, this is all Rugambo, right? This is all Rugambo. Maybe you can talk about, you can discuss about, it is expected that Jonico is expected to have substantial trading losses in the period. The accountant wishes to create this is okay. This one has no issue. Not so. The issue is to include expected cost of disposal. Of course, expected cost of disposal can include the legal costs and redundancy costs. Those are okay. The issue is this. Okay. This is concerned to. Okay, then you can talk about. Let me just copy it. Okay. This is fine. It's not an issue to include. This is okay. We can say that. Okay, let me try to design it here. The accounting issue. The accountant is of the view that the issue is the trading what? Is the future trading losses. The accountant is of the view that future trading losses are included in the restructuring restructuring provision for the year. However, this is against the guidance of IAS 37, the guidance of IAS 37, which does not allow future losses, which does not allow making provision for future losses, since there is no any obligation to the same. Remember, you've already discussed the details of these standards up there. So here you're just trying to apply, to explain. Look at this. To explain the relevant accounting rules that have been breached, not to state what is in there. However, we're going to some questions. For questions that do not have part A as this discussion, then whatever you would have discussed in part A, when it comes to ethics, you discuss it to detail, because the accounting treatment has not been discussed in the previous part. Okay, so is this fine? Can we proceed? Alright, so I'm getting my issues from the scenario. I have discussed the accountant. The COO is concerned as to this may affect the sales price and would almost certainly mean bonus target. So this COO is an accounting issue because the COO is saying do not make a provision. So since he's saying that we should not make a provision, it is an accounting issue. So let us see how we can pick it. Is concerned. Okay, so we can just discuss it. You can say IAS 37 requires that a restructuring provision is made when there is. Now you have to discuss when there is a constructive or legal obligation. However, the COO is against this, which contradicts the requirements of the standard. If you can't remember the standard name, you can go ahead and say the standard says or the standard requires. It is also fine. So can we proceed? So now we have discussed the accounting issues, but the question is why is this COO against all these accounting issues? Why do you think they are rising? Who can give me the reason? Why do you think the COO is against almost everything?
I feel like they want to manipulate the financial statements so that they can receive the bonus.
Perfect. All the issues above affects the profitability of the, what we should use, of Ramco and this is to impact on the profit. Which name did they use on the profit? Where is it? What did they use? They used the profit rated bonus scheme for the managers. All the issues above affect the profitability of Ramco, and this is to impact on the profit rated bonus scheme for its managers. Now when you come down here to discuss the okay, now we can mention this free mark. Perfect. But I wanted to have this. When it comes to the principles, that is okay. But this statement here is going to back us up when discussing the threats to objectivity. Because someone is going to be beneficiary, that's why they are trying to manipulate the financial statements. So we said we have these free marks. We can have these free marks and put them here as our number 2. We say that the accountant, in fact the accountant is not a major, here it is more of the COO. The COO's actions are not in line with the SAL Code of Ethics, or you can just use any of them, which require presentation of relevant and faithful financial statements. That's a free mark that you can enjoy. Okay. Then we go to number 3. Number 3 is discussing explain and apply any principles which have been applied. And under the principles we observed, we said there is professional competence and due care. Someone is going to ask me, but do we have to write all of this plus the accounting issues, no, plus the principles, and then also discuss the threats and then the actions for just 7 marks? My friend, 7 marks are very many in the paper. But also, since we are all different, someone will identify this, another one will identify that, while the other will identify this. Given the fact that you have limited time, the art of reading will determine how many points you will see in the scenario, and what you see is what you write. These are around 1, 2, 3, 4 points. None of you, I'm sure, can see all of them in the scenario, but they are provided so that each one of you at least has something to identify in the scenario, and they put down. So if you identify 2, you still get your marks. If you identify all, you still get your marks. Okay, but at least you must follow the flow. Apply the principle. So now our principle, we said it was for professional competence and due care. We've discussed so much of the COO because of the company. Now let us discuss the principles. But in your answer, you'll have these accounting issues underlined. If you can, you even borrowed. Then you come to professional competence and due care. Professional competence and due care. I told you, avoid negative statements. Don't say lack of. No. Just say professional competence and due care of the accountant. Of the accountant. Make use of short headings and underline them. Okay. So then we can say it appears it is like the accountant is unaware, because now why are you accusing the accountant to be professionally incompetent? Then you come and look for this discussion. In fact, you already put it under your accounting issues, this discussion here. Because including future trading losses shows that they are not aware of the requirements of IAS 37. So it is like the accountant is unaware of which costs are to be included in the restructuring provision. In the restructuring provision. Okay, you can see it is like the accountant is unaware of which costs are to be included in the restructuring provision, since okay, what was the words that the examiner used? She has implied that the accountant may lose. Okay, there's also where is it? Create a to include, since she's to include. Okay, can copy this. Always make use of the statements provided by the examiner. Since he is to include. Why am I using he? In the scenario they talked about he. Please, you have to be very smart here. And then the COO, it is she. So in your answers you should play around that. Okay, since he suggests to include, since he suggests to include the, this one is okay, no issue. So we just have to query this. Since is to suggest to include the future trading losses which have no obligation, or can say for which Ramco has no obligation. Is that okay with everyone? Guys, is that okay? The way I've framed this, the way I've phrased it.
It's okay.
Then we can go ahead and suggest, for this one here, we can go ahead and suggest an action. So what do you think the accountant should do, since he lacks some information? Yes?
I think if we are sure that he's not yet an ACCA, as per the case, would recommend him to go for such a professional course.
Okay, that is a good one. Should attend professional courses. That is also fine. So they can go for trainings, right? Should attend regular trainings and professional development and professional development what? Courses to improve on his knowledge in the accounting standards and their requirements. kaput. Did we see any other principle breached in here? Is there integrity? Is there integrity in the scenario? Wanji? Okay. Is there professional behavior in the scenario? Is there objectivity in the scenario? Now, do you have to discuss them? Hello? Do you have to discuss them?
No, we don't. If we can't test them in the scenario.
All right. Because you have other points. You've seen self-interest, you've seen intimidation. So don't discuss those other relevant points. Talk about the professional competence because you can back it up from the scenario. Then go ahead. We can follow our guideline. We have discussed the principle that we have seen, it is breached. Let us discuss the threats. So under threats, you come and write self-interest. Okay, self-interest. You underline it. Meanwhile, these ones are not underlined. You shouldn't underline them. You only underline the main headings. Okay. I just picked them from the scenario when they're underlined. Okay. Self-interest. So the question is, out of these accounting issues discussed, who is having self-interest? Yes?
The COO.
The COO. Perfect. So we are going to say that I'm going to pick my explanation from the scenario. Where is it? Well, I'm going to pick this. I adjust it to form my answer for self-interest. Okay. So we are saying that Ramco, I told you this should not be underlined. Ramco operates a profit-rated bonus scheme for its managers based upon the consolidated financial statements. However, the recent results have been poor and bonus targets gave rarely been achieved. This explains why the COO is trying to manipulate the financial statements not to include any items that would reduce the profits of Ramco, hence making it hard to earn the bonus. It is therefore clear that the COO is acting with personal gains, with motives. Okay, let me see. We should have shorter statements. This explains why the COO is trying to manipulate the financial statements not to include any items that would reduce the profits of Ramco, hence making it hard to earn the bonus. Okay. It is therefore clear that the COO is acting with personal interests as far as the bonuses are concerned. Is that explanation too hard to draft in the exam? I know with practice you can be able to draft in the same line. And trust me, there is no format of correct answers when it comes to ethics. It is about your interpretation of the situation that earns you the mark. Are we getting it? Then you can give advice. The COO should avoid acting with self-interest, okay? With self-interest. Or what we can do, we can say that with self-interest, or you can say the COO should not allow to be influenced by personal gains and interests when preparing financial statements, because they are to be used by different stakeholders. In fact, let me take this. I'm avoiding the self-interest word, using it again in my explanations. The COO should not allow to be influenced by, or should not be influenced. You know English, the COO should not be influenced by personal gains and interests when preparing financial statements, because they are to be used by different stakeholders. Then someone identified intimidation. Someone identified intimidation. We are now discussing, what? We are discussing, where is it? We are discussing principles. We finished. We are discussing threats to objectivity before coming to the available actions. And the first threat was self-interest. The second one was intimidation. And all this information is within the scenarios. This one here. This is for intimidation. Self-interest, we already saw it. Okay, so under intimidation, we are going to discuss it also. What we are going to do, all right, can anyone draft for us? Or can you guys draft intimidation in the chat box? That can help. Each of you discuss a point on intimidation and put it in the chat box. This is the scenario. You're picking it from here. So can you please discuss that? I know you've been enjoying the discussion, so discuss for me that and put in the chat box. You guys are taking long to finish. Just pick something, just a small line. Just a small line and then you answer. Okay, I'm receiving some discussions. Anyone trying out? Or we go with these ones? Alright, so let me give feedback to these two. Those who have not submitted, it's okay. Okay, we have Florence. The COO has implied that the accountant may lose his job if he were to put such a provision in financial statements. This is an intimidation to the accountant since CEO is threatening him to lose his job. Okay, but you remember when I said I don't want to use the word self-interest in my explanations? Also keep practicing so that you don't repeat the word in your explanations. So this is okay, but of course you need more skill in drafting. The COO has urged the accountant not to include the restructuring provision as this will affect the return. This is very good, Joseph. This is good, but you need to beef it up. How can you beef it up? It is the duty of the agent in bracket COO and the accountant to maximize the returns of the shareholders of the principal in bracket shareholders. If you read the conceptual framework, this information is there, so you can draft your answers in that way. It is the duty of the agent and the accountant to maximize returns of the principal. However, now get this, however, this should not be at the cost of other users of financial statements. Are you getting it, Joseph? Now,
Yes, sir.
This is a statement from someone who recalls their concepts. Then you go down and say, the CEO threatens the accountant will lose their job if they have to recognize the provision. I said, try to run away from the same statement as your heading. The same thing I told Florence. Try to run away from the same statement as your heading. This was an extract from the what? From the case scenario. which shows application, and therefore it is a plus. But go ahead, because you see this statement here, Joseph, it does not go to a conclusion. So you take it to a conclusion by discussing its implication. All right. Hope, Joseph, that is clear, right? Okay, I have Michael dropped in, and then, okay, let me get theirs. We also discuss them before I give my final views on this. So, Joseph, that was good. At least that was good. You can get marks. But application is very important for Florence. Okay, we have Michael here. Michael says, the accountant receives a threat from COO not to follow the accounting requirements in his presentation, otherwise he may lose his job. As an accountant, he has ethical duty to act in the best interest of the public. This is so good. This is good, Michael. But I'm going to, you see, there are many, this was good, this was G. There are many users of financial statements, and we discussed them under the conceptual framework. So apart from the public, we have the government, we have providers of funds, we have investors, potential investors, we have lenders. So this would have been better if I have said to the best interest of the users of financial statements. Is that okay, Michael? Michael, is that
It's okay.
It's okay. Can unmute back. And of course, you should have this heading, all of you. In your discussions, you must have intimidation as your heading. Then Patience says, the COO implied that the accountant may lose his job. By the way, they don't mark the English, so don't worry. May lose his job if he was to recognize the provision and the expected costs of disposal. This is an intimidation threat. Yes. Assuming that you didn't put the title intimidation, then you can go ahead and use it in your explanations. Okay, this is an intimidation threat, and due to fear of the accountant to lose his job, he is likely to not recognize the provision, and this will lead to presentation of financial statements that are not true and fair. This is so good. This is good for that explanation because you brought it very well, especially this one. You and Michael, you talked about this, which is very, very important, and I discussed it here for Joseph. Okay, we always want you to conclude your point. Take it to the end. Don't leave it hanging. Okay, Raymond, the CEO has implied that the accountant may lose their job if they are to include the under provisions. Okay, this creates an intimidation threat since the COO is trying to threaten the accountant in order to do something that contradicts with IAS 37. Okay, but now since we are not discussing, guys, and have you seen me talk about standards? I don't see any standard unless if I made a mistake. When it comes to professional, when it comes to principles, threats, and then actions, we don't discuss standard names. Raymond, is that clear?
Yes.
Because you already discussed it in your accounting issues. Is that okay? Okay.
Yes.
Perfect. So, what is my view? Let me also design mine. So for me, I'm saying under intimidation. Yes, please.
I have a question. I'm asking, according to the format, you're saying we have to first start with the accounting issues, then we start discussing the principles and the threats, yeah? Would I be correct? I don't know if my approach would be correct. Would I be correct if I put all that in like one sentence, or it's supposed to follow that specific format? I first discuss the accounting issues, then I come down and talk about the principles.
Yes, you see, Patience,
Mm,
an examiner wants work that is organized.
mm,
They always look for somewhere to put a point. I mean, to put a mark.
mm,
So this systematic flow of your answers leaves them with no option but to give you a mark. You get it? But if you have no any flow of your work, you put the ethics, and then you bring in the accounting standard, then you bring in the action, everything is messed up, eh? They fail to get where to put a mark, and you are likely to have even repetitions, so many of them.
Okay, mainly my worry was time management, because I was looking at how am I going to manage time.
Perfect. And you see, if you flow systematically, time management becomes easy.
Okay.
You get it? Otherwise, you are likely to write many accounting issues and less of these other remaining three.
Okay.
So this one shows you that, okay, once you see that, okay, I've written maybe something enough under the accounting issues, I need to write something about the principle. Then you can write a principle. And you see, yes, if you have your accounting issues properly laid out, the principles become easy, even the threats become easy.
Okay.
Because you can even move to your answers and see what you've put down, and then which principle you can discuss.
Okay.
But
Okay, thank you.
I'm sure you will be able to get the flow if you practice now another ethics question, debrief the answer. Go to another question, ethics, debrief the answer. You'll find that it is easy to follow.
Okay.
Yeah.
Thank you.
It is a technique that you must master. Okay, I want to discuss intimidation before I let you guys to be. We have 8 minutes. So for me, I'm saying, okay, what is causing the intimidation? For me, that is my point. What is causing the intimidation? So we can say the COO is threatening to do what? The COO is threatening to dismiss the accountant. Okay, threatening to dismiss the accountant. Should he recognize a restructuring provision? Should he recognize a restructuring provision? So this statement alone, it is brief, but it is getting to a conclusion. Someone is being threatened. Why are they threatening? Why is he being threatened? Because of recognizing a restructuring. Sorry, no one is going to penalize you. Restructuring provision. Okay. This puts the accountant in a dilemma. However, he should not give in to the pressures. You see how I'm even bringing in the word, the undue influence thing. He should not give in to the pressures. He should not give in to the pressures as such should prepare financial statements that are in line with the requirements of the accounting standards. Now we are going to bring in the actions. Okay, we are going to bring in the actions that can safeguard the accountant if he goes ahead and prepares financial statements that are in line with the accounting standards. So now we can discuss the actions. Of course, for me, you all discussed this part. You are all correct, but also my discussion is okay. I told you there is no correct answer when it comes to ethics. We are all correct depending on our interpretation of the situation. So we said that under actions, we start with internal, then we go to external, last resort, resignation. Let me show you how we present it. So we can say that the accountant, because we've told him he should go ahead and follow the standards. So what should he do to be safe? The accountant should approach the COO and remind them of the ethical principles and persuade them. Okay, the accountant should approach the COO and remind her, and remind her of the ethical principles and persuade her to do what? To make the necessary adjustments, so that the financial statements are true and fair. I have borrowed a word from, was it Patience? So the accountant should approach the COO and remind her of the ethical principles and persuade her to make necessary adjustments so that the financial statements are true and fair, or are fair and true, anything that you want. Then what are this is the internal. Then do we have any external? Yes. If the COO insists, because if you've talked to someone and they have accepted your internal advice, no need of going for the external advice. So what do you do? If the COO insists, okay, then the accountant, in fact, this is also still internal, because now I'm going to push the accountant to go and talk to who? Can talk to the NED, can talk to the internal auditors. Then the accountant should consider discussing the issues with the non-executive directors if Ramco has any, to the non-executive directors or internal auditors if Ramco has any. Are we getting it? However, the accountant can also seek legal advice. The accountant can also seek legal advice, and if he is a member, and if he belongs to any professional body like SCCA, can seek advice from it. Are we getting it? Then, so this is our internal, then external. In case, okay, in case the accountant fails to get a solution, then he can decide to resign from the position rather than being part of the, or we can say rather than producing misleading financial statements, which is considered to be professionally unethical. So I am just using my words so that I can draft a solution that is not bookish. Someone would have said the accountant should resign. Not really. Give an advice with a reason why someone should resign. I don't know if you're getting my argument. Alright, so that is my discussion when it comes to ethics. So I'm sure we've discussed the 20 marks of question 2. So just have to go and practice. This question requires you to be very confident in accounting standards for you to earn the first marks. And then the second marks with what we have discussed. So is there any question regarding the flow of the work, or we call it a night?
Hello?
Yes, Joseph.
Yes, I have two questions. Yeah, one on the ethics. Yes, I've appreciated the flow as per the guidance you've provided. But then, is it possible to break down, like, I identify the relevant maybe bleach to the standard, then I link that to the ethical issue, the threat, and then the conclusion for each, like for each bleach. For example, I identify the bleach, I mention the risk or the issue, then I conclude. Then I jump and go on another like that. Then first of all, piling them like in the way I've done. Is that allowed?
I think it falls in line with what patient said, and my response was, this flow just gives the examiner what to mark. But also, if you think you can bring out all the cases with whatever presentation you take up, you still earn the mark. I told you with this ethics question, there is no correct answer. What is important is for you to back up your answers with evidence from the scenario. Have I answered you?
Yes, you have.
Yes, don't just get any unsupported conclusions from out of the blue. make sure that everything you're discussing is in the what? In the case scenario. You'll be able to earn the marks.
Okay, that's fine.
Yes. Second question.
Then yes, then the other is on the professional marks, the 2 marks. Yeah, so these guys will just read through and then see whether our presentation meets all the requirements, and then they'll be able to award the 2 mark anywhere.
Yes.
Other instances where they can maybe bring like a performer and say maybe write a report or write a letter and address it to this, whereby maybe they'll show some of the professional performance.
You find that in SBL, so don't worry. But here there are no formats that they award the marks. It's your professional flow of the answer. You get it?
Okay.
If you say that
Hmm.
the accountant should resign as your first action, then you will not get the professional mark. So it is how you explain the ethical threats, the professional principles are breached, that earns you the professional mark. You get it?
I think that's clear.
Yes.
Yes.
And also if you miss out on the actions or the recommendations, then also you can't get the professional marks. So this flow that I've given you, it automatically gets you the professional marks because there is a flow of work. Is that okay, Joseph?
Yes, it's clear.
All right. And that's why even when it comes to question 4, where we look at investor focus, also those 2 marks are there to see how you apply in the real life. You know, with these ethical dilemmas, they are real life. So how you handle them shows how professional you are, and so you can earn those 2 marks.
Alright, thanks.
You're welcome. Maybe also, Joseph, have I described what integrity is, what professional competence is?
No, you haven't.
So the application of those principles also earns you the what? The mark. Okay, any other question for me? Or we call it a night? All right. Have a good evening. Yes, Florence.
Ivan, my question ain't related to the ethics question, but to the question that you left us with of share appreciation rights. I don't know if you also go through it.
You want me to go through it?
Yeah.
Did you share your attempt? I think Raymond did. I'll just have to find time and go through it. I have a busy schedule of late, by the way. I'm in the weeks of reports, so I'm too tight. But I'll mark, Raymond, your work. Don't worry. I'll mark and give you feedback. Forrest, did you try out?
I did.
Can you share your attempt? So that when I'm going through Raymond's, I can also go through yours. And in case I find anything that we have to discuss, I'll do so in our next class. My urgent thing that is now on table is going through the question 1 consolidation. I know we shall be there, and today is 13th. I know by 20th we should be done with these revision things. Then I let you guys concentrate on your summaries in preparation for the final exam. Does that help?
Ivan, which question is this?
Yes,
Is it the
Patience?
mock? The question Florence is talking about, which question is this?
Florence, clarify.
You sent it. You sent it first in the group when you sent this ethics question. There were 2.
Yeah. So you try out, share, then I'll go through. And if I see that it was too technical, we shall discuss it. All right, please have a good evening. Nice preparations. I wish you the very best.